Docusign is your, big company that everyone knows. I was just checking out what is the market cap of Docusign. It is $16 billion today.
So Docusign was my second company, and I co-founded it with a friend of mine who had worked for me in my first company. And I ran that as the founding CEO.
When you were starting Docusign, what was the original thought?
I remember telling the very first venture investor, who's Ignition Partners here in Seattle, that it was going to be a winner take most. What was in that package of IP from DocuTouch were two things of value. Number one, the name Docusign. They had trademarked that name. And number two was an issued patent for signing documents via the internet. And I thought that was really interesting. There were other.
Was it obvious from day one that this is going to be big, or do you see the sign of product market fit immediately, or was it a
relationships that really took it from, oh, this is kind of cool and interesting to this is going to be amazing? The first one was Microsoft. And that's how we landed Microsoft. It was not even me calling them. It was them calling me. It was quite amazing. But I am trying to use it as a vehicle to help founders on what is otherwise a very difficult, lonely journey that is almost statistically destined to fail.
Why is Docusign still dominating as one? Why is one player dominating? It's a seemingly simple software. Right?
And my wife and I collectively have probably invested in almost 20 venture funds around the world.
Right, so the dislocation was, in terms of valuation, was crazy, and it sort of cratered in the last 1.5 years. And we could see the secondary share, all marketplaces, coming crashing down. 3 days. You said you did 3 masters. Why did you do 3 masters? Why didn't you stop after 2 masters? My guest today is the co-founder of Docusign, repeat entrepreneur, and is now creating a new company called Founder Nexus to help the next generation of founders. We'll talk about his experience as an entrepreneur, founder, and why is he starting his new company, Founder Nexus, and most importantly, what was the exit like from Docusign. So to continue to listen to this, please subscribe to Startup Project wherever you're listening to the podcast. With that, Court, welcome to the Startup Project.
Hey, thanks for having me, Nataraj. It's great to be here, and I'm looking forward to the interview.
Where are you joining us from today?
I am in Seattle, Washington.
So, you have started 4, 5, 6 companies. I've lost count on your LinkedIn profile. Can you give a little bit of background? I know Docusign is your, big company that everyone knows. I was just checking out what is the market cap of Docusign. It is $16 billion today. And everyone will know about Docusign, but you've done a couple of companies before and some companies after. Just give us a little bit of background of your career till now.
Certainly. So I started my career as an engineer. So my undergraduate degree was in engineering, and I did 3 postgraduate master's programs in different forms of engineering. But I always knew I wanted to be an entrepreneur. So for me, that was just a pathway to getting to where I am now. And I worked early career for a semiconductor equipment company, ran a division for them in Europe, and then went to work for Cisco in the early days when Cisco was on a rocket ship. During the years when Cisco was considered the fastest growing company ever, which was a fantastic place to learn leadership.
I had CEO of Baffle, who's on his 4th company, who was also at the same time at Cisco, because Cisco acquired his company. Yeah. So you're my second guest in the last 5 guests who has been the Cisco rocket ship.
Well, Cisco fostered a lot of successful people. A lot of people came out of Cisco because it was such a great place to learn. I moved to the Northwest, which is where I reside now, in 1996, and started my first company at the dawn of the internet era, before there was e-commerce. And I built one of the very first e-commerce engines back then and ended up selling that company. I tried my hand as a venture capitalist for a little bit, but realized that I really enjoyed building companies more than I liked investing in them at that time. So Docusign was my second company, and I co-founded it with a friend of mine who had worked for me in my first company. And I ran that as the founding CEO until 2008, and then left because really my passion, Nataraj, is the first beginning phases of a company. I love what I call napkin to product market fit phase of development, where every decision is life or death, everything is consequential, there's lots of twists and turns, and you have to remain quite nimble to survive. And that's my favorite part of growing a business. So in my career, I have structured it so that by the time I get to about year 5 in the company's evolution, and there's some product market fit signal coming through, I will tactically exit and go start another one from scratch. So I
So,
left DocuSign in '08.
what was the original thesis of DocuSign when you guys first starting it out?
I'm sorry, say again?
When you were starting DocuSign, what was the original thought, or like did it evolve? And talk to me about a little bit of like how that formation happened.
Absolutely. So my co-founder, Tom Gonser, was the one with the idea. So he actually came to me. He had left my first company, gone and started his own, and was in the process of in his company selling some assets from a prior venture that his company had acquired after it had failed, called what was it called?
Something with
DocuTouch.
net.
DocuTouch was the Seattle company that had, and what he had at the time, and he called me and said, "Hey, I think we should go build a company around the IP that my company acquired and is now trying to get rid of." And what was in that package of IP from DocuTouch were two things of value. Number one, the name Docusign. They had trademarked that name. And number two was an issued patent for signing documents via the internet. And I thought that was really interesting. There were other things in that IP stack. Those are the only two things I thought were valuable. And so we extracted that. I actually bought the IP from his company, and that's the basis around which we founded DocuSign. He left and I built it, and we built it together. It was amazing.
Was it obvious from day one that this is going to be big, or like, do you see the sign of like product market fit immediately, or like, was it a slow grind?
It was a really slow grind. It was a really slow grind. I mean, I remember telling the very first venture investor, who's Ignition Partners here in Seattle, that it was going to be a winner take most proposition. And they kind of scratched their head and said, "What does that mean?" And I said, "Well, someday in the future, not determined, there will be one market leader who has about 70% of the worldwide market share of electronic signing. There will probably be a second player that has about 20%, and a bunch of other copycats that'll be fall into that last 10%. So if you roll the camera forward to today, DocuSign owns about 76% of the worldwide market. Adobe has about 12, and everybody else exists in that last, 10 to 12%. So it pretty much came true exactly as I predicted it, 16, 17 years ago. 20, yeah, 20 plus
20
years
now.
ago.
Yeah.
Yeah, it's been a long time. 21 years ago. So it was not obvious. It was a grind. There was a lot of creativity, shall I say, in trying to figure out how to get product market fit with that offering. And it took years. And even from then, from the founding in '03, we didn't go public until 2018. So it's 15 years to get to a public offering.
Who were the first customers that sort of committed to using DocuSign?
Well, I think the more interesting question wasn't the first customers, it was the most impactful customers. So what were the relationships that really took it from, oh, this is kind of cool and interesting, to this is going to be amazing? The first one was Microsoft. And this was actually an interesting sidebar story. So we were a very early adopter of .NET technology in the early 2000s. And it turned out that at Microsoft's Executive Briefing Center, the .NET team was presenting to the executives of the rest of the company. And without telling us, they actually used DocuSign as their example of a company using .NET on a cutting edge way, in a really unique, fascinating, value-derived manner. And in the audience that day was the chief legal counsel for Microsoft. And from that meeting, I got an inbound phone call from him saying, "Hey, I was just at the EBC. I heard this pitch. I heard this thing is really cool. We should be using that." And that's how we landed Microsoft. It was not even me calling them. It was them calling me. It was quite amazing. And because it was from the legal team, it became sort of blessed inside the organization from day one. So it was really not a challenge that I was having selling it within the context of Microsoft. So that was the first big singular customer. And I will also mention here that at that moment in history, Microsoft was the biggest company in the world, certainly the most influential. And so that really helped a lot of other smaller companies, even if they were big themselves, get comfortable, right? Because if they understood that Microsoft was willing to use it in their legal and business operations, it sort of was the seal that I needed, seal of approval at the corporate level. So that was probably the most impactful first early customer. And then the next one by far was the National Association of Realtors. And the NAR, as they refer to themselves, had a piece of software that they built and was being used by 3 million nationwide realtors to create residential purchase and sale agreements for homes.
Yeah.
And they liked what we had, and they had no way to close documents. So they agreed to embed our tool, in this case, the signing operation, inside their piece of software. So it was a white label embedding deal. But it meant that every realtor in the country immediately had an opportunity to send their documents to home buyers via Docusign to get signed. And so that was a huge deal because not only did it give us volume, but it gave us exposure to an incredible group of end users, because most people that were buying homes obviously have jobs somewhere and they have a day job where being able to sign things electronically would be fascinating. And so we got a tremendous amount of lift from doing that deal.
I mean, once you convince Microsoft to be your customer, I think that becomes an easy sell to sell to other organizations, right? I mean, I think it's also a sign that when you have customers inbound versus you going to reach the customers outbound, that tells that you're really doing something new, unique, that the market really needs, and you're solving a real problem, right? It's sort of like a proof point when you have a lot of inbound versus you are trying to do outbound and trying to sell. That tells you that something is working or something, what you're solving is really worth it. Going back to your thought about, one player will have 70%. In one sense, you're right, but there's also a sense in the market, primarily on Twitter, when DocuSign is, this gigantic company, and people sort of sometimes facetiously say, why is DocuSign still dominating as one? Why is one player dominating? It's a seemingly simple software, right? Why is this one player still doing this one unique task, whereas you see competition in other areas, like for example, just documents, Adobe is there, Google Docs are there, the Box, the company which does this there, OneDrive is there. There's so many other, companies around document management. But why does DocuSign still dominate 70% of the market? Like, what is the core reason, do you think?
I would tell you that there are two core reasons. The first one is that humans prefer consistency, meaning if there was a whole satellite array of signing methodologies that you and I were being thrust upon us on a daily basis to sign things, it would get confusing. It would be hard to find. Those documents then get stored in the platform that issued them, so it would be hard to find your documents. So from a business perspective, that's why I predicted the 70% domination. Both human characteristics were going to try to standardize on one player to
It's
make
also
it.
a trust factor, right? Like if I see a
Yes.
link from DocuSign, I know that once I'm exposed to it, I trust a DocuSign link versus, some other sign like X sign, or I don't know, whatever sign that people are naming things, right? Like once I know DocuSign, okay, that is a trustable link. And next time I'm trying to send a document, I'm going to use DocuSign.
Yeah. But the other main reason, and the reason I would say that it remains dominant from a business perspective, is that early on we recognized that one of the main elements that needed to be resolved wasn't the actual signature. It was actually the flow of data between the universe of document creation tools that exist sort of upstream of us and the universe of document implementation and execution tools that exist downstream of us. So the way I visually described it is I said there's like two giant land masses separated by a huge crevasse. And upstream you have Word and Adobe Acrobat, and you have all these special purpose platforms that create documents. that include a lot of relevant data. So the signing is part of that executional model. And then across that crevasse, you have a whole different group of players, big software companies, Dynamics, SAP, back office things that Salesforce, things that need data for, or need that sales derived data to produce the product, ship the product, support the product, update the product, bill against the product. So you have all these back office systems that need the same data that the upstream systems created. So what we started investing in very early was a set of very robust APIs that could take the data that was put into the document by those upstream systems and seamlessly move it to any downstream system. So we built over years and years and years an expertise in data translation from platform to platform via APIs, such that we now have such a large constellation of those tools that we really cannot be replaced by a third party, because any company that would come in and try and replace us would have to have all of the same tools that that particular customer needed, and they would have to work perfectly on day one. And so most enterprises will not take that risk. That's too big a risk for them. So we find that is perhaps the biggest moat we were able to create, and we've really leaned in on that. That has been that's been a really long haul for us in terms of differentiated advantage, and it continues to bear fruit to this day.
So when you left Docusign, did you sell your equity, or did you keep your equity, or you just kept all your equity and moved to your next project?
The last one. I kept it all, moved on, started several more companies, and by the time the company went public, 15 or 7, 8 years later, I still had all my equity.
I think I mentioned in our last conversation about Martin, I think, who runs Incisive VC, and I was talking to him a while back, and he mentioned that he was one of the investors in Docusign. And he said he was holding his shares since the IPO, so he never sold his shares. And he was telling me some ridiculous multiple on his investment. I'm curious, what was your multiple, if you were willing to share? Like, how did that multiple look like?
That's funny. I've never calculated. Well, imagine that the shares were founder shares, so they were basically fractions of a penny, and they got to over $300 a share.
It's like, I don't know.
It was a very healthy return, let's just say. It's no longer at 300, but you sell on the way up, and so we did fine.
Yeah. So you knew that DocuSign was, relatively successful. Right after 5 years, it was running well, and then you still went on to find other companies. Like, do you think you're an ambitious person?
I think people would describe me that way. I'm certainly an optimist, and I love the thrill of getting something off the ground.
So once you're successful, if you're doing repeatedly, that means you're really into it.
Yes.
That's the difference between like someone who's just doing it for the sake of, I need to get that exit, but what will you do after you get the exit? Then you'll still do the same thing. That means you're in it because you love the game of doing it, right?
Yeah.
So, I mean, you've done, so post DocuSign, what was your career like? You went on to find another company.
Yeah.
How did that pan out?
So, the third one was a renewable energy company, which I was trying to take a swing at a business model that did not require a lot of venture capital, actually didn't require any venture capital. It was a few $100,000 of angel money, and that was it. And it was intended to be a cash flow business, which it did turn out to be. So that one worked out in that I was able to start returning cash flow to my investors during the course of that business. And so, it wasn't, I would never say that was a giant hit. That was a reasonable set of experiences, but I would say, it was okay. It did return capital, but it wasn't returning it at a high multiple or anything. That was unfortunate. That one had a natural end point because it was a licensing business that ran its course, and that's sort of the way I designed it. And then I started my fourth company, which is a consumer data acquisition company called Metabright. And that one was my most spectacular failure by all measure. That was a rocket ship that was going 50% month over month growth on a multi-million-dollar run rate. And between that and absolute catastrophic failure took less than 3 months. It was an,
Wow. What
it
was
was
the,
an
why
absolute
did it fail so drastically?
yeah, that's a fascinating story. So, how do I to brief? So the technology we were building was data extraction from checkout register receipts. So when you get the little slip of white paper out of a checkout register, it has all this cryptic writing on it, and we were able to build an OCR-based system that could read and translate that into real product data. Okay, we'd spent years and a lot of money building our solution, and we were licensing it to other application providers to embed in their services, and we were taking a fee for processing this data. Okay, that was the business model. The biggest customer we had at the time was delivering 90% of our revenue, and they were growing like gangbusters, so doing super well. One day, the founder of their company was at an event where sitting next to him at random was a young man who had just finished his master's program in Croatia. And as it turned out, he and his buddies had written a program as a master's student to read receipts using a cell phone. And this young man basically was willing to give his code to my customer effectively for free. And so within a matter of weeks, without me knowing it, my customer tested his thing. He's like, hey, this works great. He's willing to give it to me for free. Metabright's charging me a fortune. So he called me up one day and said, you're out. He's in. Bye. And when you have your 90% revenue customer walk away with no warning, you don't have a way to survive that. I tried, I went to Croatia to try and convince the buyer or the seller of that technology to sell to me, couldn't get a deal done. And so I called my investors and got my employees together, and I said, there's no way for us to recover from this. We have to shut it down. So that's how it happened. It was very gut wrenching.
But you ran it for 7 years, right?
Metabright wasn't that long. Metabright was only 4 years,
Only 4 years.
2014 to 2018.
Got it. Um, so you started, I mean, now 4 or 5 companies. How do you think when an opportunity comes, what is the sense? Like, how do you evaluate it? Like, how do you look for value? Is this valuable? Worth my time? How do you look at that?
Well, I'm no longer looking to start I'm starting another venture right now, Founder Nexus, and we'll talk about that perhaps, but I'm not looking to start another tech company per se. So that's
Let
what
me
I'm looking.
rephrase it. Like when you were looking at the previous ideas, like how were you looking at in the perspective of, for value for time, or how were you evaluating the opportunity then?
So I have a methodology that I really try and promote to early stage founders that I've used in each of my companies, and it's a bit rigorous, but I think it makes sense. And that is, number one, as soon as um, you need to be able to validate your product by testing if somebody's going to pay you money for it. So you don't build anything before you can get somebody to pay you for it. Don't even build a prototype. Try and get them to pay you for something, just the concept of it. Put down a down payment, do something else. But test the idea enough so that you can actually offer something to somebody that before you even build it, they're willing to pay for. So that's hard to do. And there's a whole methodology behind that I could go into, but it takes a while to unpack that. And then once you have something that actually has somebody willing to pay for it, the second step, and this is the one that most people miss, is to try and actively kill it. And by that, I mean, I have a methodology where I go back and I try and find all of the founders of the companies that had preceded me in the solution space that I'm trying to enter, reaching out to them and saying, hey, can I get a few minutes of your time to talk about what happened to your company when it was going through this cycle? And why did yours fail? And I would learn through that exchange all of the fatal flaws, is what I call them, the foundational flaws that I needed to be aware of. And it is an incredibly eye-opening process. I'll say that. And you have to, if you are diligent at not only uncovering all the fatal flaws, but then resolving them, figuring out a way that your idea, your approach, your model can or does inherently solve all the failure modes of your predecessors. Those two things together mean that you probably are on the right path. And then it's worth leaving your job or starting a thing or incorporating a thing. But I tend to be pretty rigorous about both of those things before I jump into something new.
That's actually really smart. And often people, when they either ask me to review their pitch deck or, suggest their idea as a novel idea, I often see that they haven't looked upon and searched for, common other related businesses or someone who has already done it and tried and failed it and didn't really understand. I mean, it's a Google search away today. It used to be much harder before, I assume. But you can clearly like do some research and figure out if this idea has been done or not. And you would think like all founders would do that, at least a basic research on, what competition exists, but it isn't. Only a few set of founders actually do that. And I think the way you put it, I try to actually kill it. I think is an interesting way to look at it as well. Um, so let's talk about Founder Nexus. So you said you're starting, I guess this is not a venture scale company that you're trying to do. You're not raising outside money.
Right.
It's sort of like a different approach. Talk to me a little bit about what is Founder Nexus and why do you want to do it?
So Founder Nexus is really my thank you note to the venture capital industry, basically, as a way of saying, I'm not looking to use it as a venture to get myself or anybody else rich, but I am trying to use it as a vehicle to help founders on what is otherwise a very difficult, lonely journey that is almost statistically destined to fail. Just the odds of failure for a venture scale founder are over 90%. And I look at those people, and myself included, as a multi-time venture scale founder, as a very valuable global resource that basically is not being optimized, right? If we're letting that resource fail so frequently, couldn't we do a better job? And so I set out to try and figure out how to assist that process in a way that could raise the odds of success for venture scale founders. And so Founder Nexus is the basis of that. Right? It is a way for founders with experience to get together on a regular basis and be both systemically and programmatically motivated to help each other by sharing experiences and not advice. So what I do is I gather these venture scale founders, I put them in a room, I break them into subgroups, and I allow them to share, I create opportunities for them to actively share their experiences with one another so that they can level up their game. Because the way I look at this, Nataraj, is that success in building a venture scale business is a series of variables that are, variable 1, variable 2, variable 3, all multiplied together to variable n equals success. And if you think of it like a math problem like that, two things are true. Number one, if you get a single variable completely wrong, meaning 0 out of 100% achievement of that variable, the entire equation fails. A single variable can tank the entire organization, and that is true of startups. The other thing that's true is that if you are only achieving at any one of those variables or any number of those variables 10, 20, 30% of its potential impact value, if you think of it holistically, then the trend of that curve is actually tending down over time because you're multiplying by 10%, 20%, 30% in that variable. And if you get a few of those, the odds that it's going to go up are diminishing, right? You're going to ultimately flatline or go down. So how do we make it so that founders can help each other so that at every decision point throughout their entire journey, no matter where they are on that journey, they have the ability to share experiences and level up their own decision-making capabilities so that every decision is made at 50% or above of its potential value to that organization just by gathering information. If I can make that easy and fluid and do it on a global scale, which is what Founder Nexus is doing, that will inevitably raise the odds of success for all of the participants.
So, I mean, I've seen this type of businesses. I don't know if you've heard about Hampton.
Sure.
This is company, I forgot his name, but Sam something. He's the host of My First Million. He has Hampton. I know a company in India called Offline, which is sort of similar to Hampton, but I think it's more similar to Founder Nexus now that I think about it. It's also for venture funded. I don't know if they're restricted to venture funded, but it's mostly founder community. Um, how do you differentiate? Is this going to be a location specific differentiation? Does every venture founder get access to this community? How do you make sure? Because community is all about like um, how do you curate the right community, right? Because if you keep it too open, then the value dilutes. If you keep too closed, then there's not much new information flowing in. So you have to have right curation. So how are you thinking about, because at the core it is like you're creating a community of individuals who can help each other and also take help from the community.
So number one, curation is key. So I filter out anybody that's never built a company before. Like if they haven't tried before, automatically not included, not allowed to participate.
So this has to be their second venture company or the second company which
It
is
might
venture
be their
fund?
first one, but they have to be already well on their way. In other words, they may have already, like it's first one, but they've already raised their first venture round or their first outside capital, et cetera. So what I'm looking for specifically is valuable lived experiences, right? So if you are looking to become a founder, mine is not the group for you. There are other places to go, right? You need to be running a business now or have tried once and maybe succeeded or failed. I don't really care. But the idea is you're bringing lived experience to the group, which means that I'm also filtering out investors, advisors, service providers, all the peripheral people who are very important to the venture ecosystem, but their experience is different. And by doing that, every time we hold an event, everybody knows that the room is pure, meaning everyone sitting next to them is another venture scale founder that's been there and done that before. Okay. So what does that do? It means that when I create these moments where they start to interact and talk to each other, there's an immediate sense of trust. There's an immediate sense of vulnerability because you're willing to share both what you did right and what you did when there were negative outcomes. And the learning is immediate. I mean, it's just the magic is extraordinary in that moment. And then I borrowed a little bit out of the book of the YPOs, EOs, Hamptons, et cetera, where they build forums, right? So the concept of a forum is a small group that builds trust over time and can therefore become sort of a coaching group for you personally. The challenge with that model that I found, having been part of all of those organizations, or very many of them, was that after about 18 to 24 months with your forum group, you've extracted all of the business wisdom from that group, and it becomes a wonderful social, friendly life support system, right? But it's no longer a business resource for you because you've already gotten everything you can get from that group. What we do at Founder Nexus is I've actually built a piece of software that, based on everybody's profile, breaks them into small groups like forums, but those forums only last for 40 minutes each. And then I break them up and I send them a message and saying, now you've been assigned from group 3 to group 7, topic has changed, group members have changed, you physically move to another space, and you get another 40-minute forum of experienced founders talking about specific challenges they're facing and sharing experiences. Okay, you get 3 of those per event. So now every time you come to an event, you've done several things. Number one, if you are facing challenges, you've heard anywhere from 12 to 20 new voices of lived experience that you can extract value from. Okay, that's in and of itself amazing at leveling up your decision making and ability to make a higher probability successful decision. The other thing you're doing is you're grossly expanding your network of highly qualified people so that when it's time for you to recruit your next participant in your C-suite, or you wanting to recruit co-founders for your next new venture. You've met so many people and heard so many different interesting points of view that this is the group you're going to be seeking to find those cohorts from, right? So it's both a problem-solving venue as well as a recruiting venue, I think. And that's different than all of the other platforms that I've seen or heard out in the wild.
And how has the traction been? What's the size of Founder Nexus now? Is it limited? I know because you're in Seattle, I'm in Seattle. Is it limited to Seattle, or is it beyond Seattle as well?
So we've held 3 events so far. We have about 150 people signed up after 3 events. And we've just opened it up to full membership today, as a matter of fact. Interesting that today was the day. And going forward, our event that's coming up next week on November 21st will be the first one where we simulcast it. It will be both a live event and an online event where we will allow non-Seattle participants to join for 2 purposes. Number 1, to expand the community, and number 2, because my long-term objective is to make sure that there are chapters all over the world, and that those chapters are then stitched together in a way that founders in one community can help founders in another community openly and are motivated to do so. So that if you are living in a place that might not have a very dense founder community like we do here in Seattle, you can still get the support you need, both in a timely and in a scale manner, and get it from all over. And therein lies the secret. Is I'm trying to facilitate something that broadens the venture ecosystem to such a degree that that venture-backed companies can live and excel anywhere physically. They don't have to come to Seattle or San Francisco or San Diego or New York or London or Tokyo. They can exist in all of any market basically.
Slightly shifting from topics, you're also LP in a lot of funds, at least a couple of them that I know. How do you decide on which funds to invest?
That's a good question. I'm very active in the Seattle ecosystem. So again, in the sense of I want to be able to give back to the community that helped me. So I'm very active in many of the funds here in Seattle, but I'm not restricted to Seattle. I have funds that are in Europe, in Asia, in South America. So I've definitely diversified around the world in terms of where we invest in funds. And my wife and I collectively have probably invested in almost 20 venture funds around the world. And in terms of answering your question, I would say it's always hard to decide who's going to be a good picker. And I say picker because venture funds, depending on where they exist in the pipeline, I tend to like either very early stage. Well, for venture funds, I like very early stage people. Like that's where my passion is. It's where I think I know the most. And so I think I can assess the people that are doing that job early stage quite well. But sometimes it's just a gut feeling. Like, hey, what is there a market or an area, a way you're approaching your fund thesis that gives you a leg up? Like a number of the funds we've invested in are run by non-traditional venture capitalists. They might be women, they might be people of color, different regions of the world. Like we want to be inclusive, both in terms of our distribution of capital, but we also think that those investors know their market better than other people might, and they're going to probably get outsized returns as a result.
And because you invest in different countries and around the globe, has any area surprised you or changed in terms of your expectation?
Geographically, no, but I will tell you that several of the women-run funds are grossly outperforming their peers. So female venture capitalists are historically few and far between, but we've invested in several funds that are run by women, and they are dramatically outperforming the rest of the crew. It's amazing. Mm-hmm. So hats off to these women, are just extraordinary.
And what's your take on? I'm observing venture maybe like close to 6 years now. I think the first 2 years were you could get really good deals. Second 2 years was bonkers. I think last 2 years is a little bit AI bonkers, everything else is dead sort of scenario. Um, what is your view on valuations? Does it concern you? Does it concern, or do you invest in funds that, go into all the high valuations, or are you valuation concern type LP? What's your overall take there?
So I'll go back to my basics. I invest in early stage funds. So by definition, these are not high valuation entry points, right? If you're coming in at the
Not
C
if you
level,
are in AI.
well, it depends, right? So I get pitched a lot of AI deals, and I've only invested in one that I would say was an AI deal, and that's not a fund. That was just a company I direct invested in,
Hmm.
and again, I try and be very thoughtful about where I place my bets. But in terms of the funds I work with, most of them, if they're betting on AI, they're not betting at writing big checks, right? They're not coming in at very high valuations. Um, they're typically coming in when it's a concept and it has a much bigger upside potential. So that to me is where I prefer to play. As I said, I tend not to do a lot of investing in the middle to late stages in companies unless I do actually have a pretty large private equity position in a number of very late stage. So right on the cusp of pre-IPO. So I think of my investing strategy like a dumbbell. I've got a ton of stuff, like dollar for dollar, they're probably equivalent. Like I probably have as many dollars in the low end as in the high end, but I have a very concentrated in PE on the high end and very
Hmm.
diversified in the low end, in their entry stages.
By
So
PE, do you mean only sort of like only pre-IPO stock, or do you also invest in like other uh, PE deals as because entire venture can be considered as PE, right? Um,
I, in that category, I'm looking for venture-backed businesses that are late stage and ready to go IPO or have a meaningful exit. So that's the platform I prefer to play in. Um, Again, the multiples aren't as big, but the timeline to returns and the risk reward curve is different, right? So you might get
yeah,
a 5x return, not a 300x return. So I can place my bets more strategically in that
and you're
category.
doing that as an individual, or because there are other funds which also do that,
So
do sort
I
of.
have representation through a private equity firm that finds deals for me, and
Mhm.
then I invest as an individual.
Yeah, because the whole pre-IPO market also, went crazy, I would say like 3 years back. And everything shot up like, Stripe went to 160 billion. Robinhood was trading at like 100 billion before IPO. I think you can buy it in public for 10 billion. Right. So the dislocation was, in terms of valuation, was crazy, and it sort of cratered in the last 1.5 year. And you could see the secondary share, all marketplaces, coming crashing down. Um, is now again a good time to get there? Because I think a lot of secondary shares have sort of come down in value. Are you seeing like it has
Yeah,
now come to a good valuation where you can find again these dislocations, which is actually value bets, and now that the markets are opening up, you could
yeah,
probably get these into IPOs in next 3 to 4 years?
yeah, yeah. I'm absolutely seeing those. There really hasn't been much of that in the past couple of years, but literally in the last quarter or two, I'm definitely starting to see some offerings where I'm like, oh, okay, that's likely to be a 2 to 3x return in 6 months, right?
Hmm.
So it's like, all right, that's a good deal. I should get in on that. So those are things where, if I'm not already in that deal, that's stuff that's been entertained that I'm entertaining now.
The one question that made me curious when you talked about your, I don't know if it's second or third company, which is the BioVision.
Yeah.
Um, in during that time in Seattle, I've seen a lot of bio-related or companies or energy-related companies. A lot of Seattle founders, second and third time founders. What happened during that phase that so many of this type of companies came out of Seattle?
I can't speak to Seattle. I can speak to what was happening on a global basis or
Hmm.
national basis. And it was Obama's election in 2008, plain and
Hmm.
simple. when he came to into the White House in '08, it seemed clear to me, and I think a lot of people as well, that we were in a near energy crisis mode as a country, and we needed a strong future source of renewables that needed investment and opportunity to develop. Certainly that was the writing I saw on the wall, and I know a number of others who found the same thing. And so we had a strong representation here in the Northwest of angels and funds and people looking at and investing in energy related deals. Bio was just, one of them. But I think a lot of that came from the Obama administration and the 8 years of that. I think there was a ton of investment there. I wish it had recouped more. It wasn't as impactful as I think everyone hoped it would be. Mm-hmm. And I'm looking at what Biden has done in his term, and I'm hopeful that some of that sticks now too. And I think some of it will, but remains to be seen.
And one more question. This is regarding your early days. You said you did 3 masters. Why did you do 3 masters? Why didn't you stop after 2 masters?
So understand that in my career, each of those masters was opening a door to a new opportunity. Mm-hmm. So I was working for a company at the time in the semiconductor equipment industry, and they had a program where they would pay for advanced education, so I didn't have to pay. And they needed people with certain new skills or certain skills in the company. So for me, each one of those master's programs was the way to open a door to a new promotion. So I was able to go bang, bang, bang and get 3 very significant promotions in a very short order of time relative to my age and experience. And so, going from graduating, with my undergraduate degree and within, 3 years and 3 master's programs, I was already going over to Europe to start a new venture for that company. You just don't get at 25. There's no way I would have gotten that opportunity if I hadn't done all of that work behind the scenes, right? It was demonstrating to the company that I was a hard worker, obviously, because I was doing this while working. It was also demonstrating.
So you were working in the company, and they sponsored you 3 master degrees, and you did 3 master degrees while working in that company?
Correct.
Which company is this?
This was KLA Instruments, which is now KLA Tencor in the Bay Area.
And all 3 masters in which subjects?
So one of them, I did computer science at Berkeley, manufacturing systems engineering at Stanford, and optical engineering at University of Wisconsin-Madison.
Wow.
And each one of them was a gateway to a new job opportunity, new career step. And I learned a lot. It was fantastic, but it was really a means to an end. So I was just doing that, and I'm glad I did them all.
Mm-hmm. That's amazing, right? I don't think any company now sponsors 3 master degrees for one employee.
Well, it depends. I mean, maybe not, but I think they recognize that their return on investment was pretty high.
That's amazing. I think we're almost at the end of our conversation. I ask a couple of standard questions to all my guests. The first one is, what are you consuming right now? What is that is influencing your thinking? It can be, for pleasure, for thought. What are you consuming right now?
So I love to read. So I've just recently consumed 3 or 4 books that were very much influential. The whole series of the 3 Body Problem. There's 3 different books in that series. Absolutely mind-opening in terms of future thinking. I thought it was brilliant. Another one, which is the second edition of a 2-part book called The Fourth Turning is Here. There was an original book in 2010 that was just called The Fourth Turning. The revisited version, The Fourth Turning is Here, was published in 2023. Absolutely amazing work in terms of contextualizing where we are at this moment in history as a human race, really, and where we are in this country specifically. It was a good, particularly leading up to this election. There was a lot of discord around this election, and it helped put that in perspective, both for me and the way I think. I'm really fond of a guy by the name of John Levy, who wrote a book called You're Invited. He's a social scientist, and it was very helpful for me as I was putting Founder Nexus together. And then another one that I just finished called The Power of Pull, which I'll actually be giving a talk on next week, because it was just fantastic. And then I'm a huge fan on a podcast basis of Acquired and ACQ2. I listen to them constantly.
Amazing. Yeah, Three Body Problem was amazing. I actually didn't read it. I started reading it after watching the show, and the show itself I was blown away. And then I started reading the book. Who are the mentors that helped in your career?
Shout out to my dad first and foremost. My father was one of the 8 people that founded Silicon Valley. He's the guy that invented the process for growing silicon commercially. And he was also on the team that discovered solar power. So my father he started pivotal, seminal companies in his life. One that led to the formation of Silicon Valley, the other one, which was SunPower Systems, which ultimately became the biggest solar company in the world. So A to my dad. The founder of KLA, Ken Levy, dear friend, great mentor. The original CEO of Cisco, John Morgridge, and his successor, John Chambers, huge influences for me. So those are probably my biggest influences.
One final question. What do you know about being a founder or investor, that you wish you knew when you were starting out in your career?
God, that's a long list. I think seek more experiential advice. I got a lot of guidance from people that gave me advice, but not experience. And usually that set me in the wrong direction. But when I was talking to people that had lived the experience I was struggling with, I got better counsel. So I didn't know that at the time.
Are there any tips on reaching out to people? Because experience, you might be facing an experience that, not everyone in your network might actually, experience, or the advice you're looking for.
Part of my reasoning behind putting Founder Nexus together was to give founders that ability to reach out and touch other people for experiences. And I think in the startup community, that's why one of the main reasons I put Founder Nexus together. So that's the place I would send people to touch a bunch of people with experiences as founders. Other things, I think, very good to learn how to delegate, but also you have to follow up. I had a couple of situations in my career where I delegated to people that I thought were very responsible and capable of doing the job. And I didn't do the follow-up necessary to make sure that they did what I was expecting them to do, and I got burned by it. So that's a live and learn. Like, I wish I'd known. I had to learn how to delegate. That was one thing, but then had to also actively follow up and make sure that it got done. And I think the final one might be how to hold people accountable, right? As a leader, we're always trying to get a lot done simultaneously. And it took a while for me to understand how to proactively hold people accountable.
Yeah, I think those are all amazing advice. And I think some of them are actually solving using Founder Nexus. And I'm grateful for you, to coming onto the podcast and sharing all the advice. And I'm really excited what Founder Nexus will do for Seattle venture community, and hopefully to other chapters and elsewhere in the world as well. With that, thanks, Court. Thanks for coming on the show.
Nataraj, thank you so much for having me. It's been a pleasure.